Good day, ladies and gentlemen. So today I want to teach you a very simple strategy that you can use to make money in the forex market. So if you are actually a beginner trader and you don't know where to start in terms of the strategy to use, I would advise you to start studying supply and demand. You can just start from there. There are so many strategies, but you can start with supply and demand. Okay, it's a very decent strategy. So when it comes to supply and demand, what you just need to know is that a supply zone is simply a zone. Okay, a supply zone is a zone where there are a lot of sellers. So it implies that when price comes back to this zone, there's a possibility that selling is going to take place. So you just need to mark out the zone and wait for price to get back to that particular level. Okay, and most times the easiest way to actually draw your supply zone, I'll give you the four different types of zones in terms of the supply and demand. There are two types of supply and there are also two types of demand. Okay, so let's just start from this. So that's for supply zone. I also want to quickly define what a demand zone is. A demand zone is simply a zone where a lot of buying took place. Okay, so the logic therefore is that when price returns to this zone, there's a possibility that you are going to get another buying opportunity. Okay, and most people confuse supply and demand with support and resistance. They are two different things. In fact, they have a lot of things in common. There are a lot of things that differentiate them. Okay, though they have some things in common in terms of, let's say, a resistance level, for example. Okay, people confuse resistance level with supply level. Okay, a resistance level usually push price down. Supply zone does the same thing, it pushes price down, but the difference now is that for a resistance level to be seen as a solid resistance level, okay, for you to respect a resistance level, you would expect it to have at least two touches. Okay, you will expect it to have at least 2 to 3 touches. So the more touches your resistance level has, okay, let's say 2 to 3 touches, the more touches your resistance level has, the stronger that level is said to be. Okay, but when it comes to supply zone, the more touches your supply zone has, if a supply zone has paid you once, the next time price is coming to that level, it becomes a low probability zone. So you can see how they differ. Okay, if you see a resistance level that has like 3 touches, you take it to be a solid resistance level that you can trust, that when price comes back there, there's a high probability it's going to push price down. That's resistance level. Okay, and resistance and support level are like very, very, very elementary, retail trading systems. Okay, but for supply zone, it's a different ball game. If a supply zone pays you once price returns there, like I said, it's going to be a low probability zone. So the reverse is the case also for demand and support level. People confuse demand zone for support because demand zone usually push price up. Support also, as the name implies, it's going to support price for price to bounce and move in the opposite direction. Everything I said about the resistance is the same thing for the support. The more touches you have on your support zone, the stronger your support zone is said to be. But that's not the case. Once a demand zone has paid you, it's low probability when the price returns there. Okay, so what are the different types of demand and supply zone? First, let me start with supply zone. You have a rally base drop supply zone. So what you're going to have is you're going to see price move in the opposite direction, which is the one we call the rally. Then you're going to see a base. Now that base will be made up of 4 to 6 candles. The candle is going to be in a tight range. Okay, it will be in a tight range as if price is consolidating. Then all of a sudden you see a push in the downwards direction. That's the drop. Okay, so that's why we call this rally base drop. So this base is what you are looking to draw out as your zone. So when price returns to that base, you extend it. When price returns to the base, you are looking to take a sell trade. Okay, so that's the first type of supply zone, rally base drop. Then you have another one known as drop base drop. Okay, so price is moving in the downwards direction, then it moves in a tight range, as if it's consolidating, then it drops again. This zone where you add this tight range is your supply zone. So you're going to draw you can draw a rectangle around that region, then extend it. Okay, so you wait for price to return to that zone, then you take a sell trade in the downwards direction. All right, so those are the two types of supply zones that you have. Then let's go to demand zone. For demand zone, you have rally, base, rally. Okay, so price is moving in the upwards direction, gives you a little bit of a tight range, then continues aggressively in the upwards direction. So this base, which is the middle part, is your what? Is your demand zone. So when price returns here, you're looking to do what? You're looking to take a buy trade, okay, from this zone. All right, so that's the first type of demand zone. While the second type of demand zone is where you have drop, base, rally. Okay, so price was dropping initially, then it moved in a tight range, about 4 to 6 candle tight range, then it moved up in the rally. So that's why we call it drop base rally. So you extend that horizontal base, you extend it probably with a rectangle or two horizontal lines. So you wait for price to come back to that level, and then you take a buy trade. As simple as that. So I have a few examples on the charts for you in order for you to get the concept. So right here we have a supply zone right here. As you can see, price was moving in the upwards direction. Okay, so this is a rally based drop example. It's rallied upwards, then we had tight consolidation around this region which formed your base, and then it pushed out aggressively to the downside. Okay, so what we have there is a supply zone, and I pointed it out with my arrow. Okay, so what do you see happening? You're gonna wait for price to come back to that level in order to take a trade, and see what happened right here. Price tapped into our zone right there and then pushed in the downwards direction. Okay, very simple strategy, simple concept. Let me look for another example that I've marked out some, so it's gonna be easy for me, so the video will not be too long while I'm searching for, so okay, this is the other example I marked out. This is another rally based drop example. So look at this, price rallied in the opposite direction, gave us a tight base, about 4 candles are in there in a tight range, and then it pushed out aggressively. Just mark out the boundary. Okay, mark out that tight range, all right, which is your base. So that's going to be your supply zone. So when price returns there, you're looking to do what? You're looking to take a sell trade. So let's see what played out. You can see right here, price tapped into the supply zone right there and gave us an opportunity to actually sell. Your stop loss definitely will be above your zone, then you manage your trade to the downside. Okay, so let me see, I think I have one last example for you. Okay, so there's one more example here. Look at this. So this is a demand zone. The two I showed you earlier were supply zone examples. So this is a demand zone. You had price dropping aggressively, then you had a tight range right here, then price shot out of that tight range, giving you a drop base rally demand zone. Okay, so when price returns to this zone, you're looking to take a buy trade. Okay, and you can see what played out. Price returned to the zone right here and gave us an opportunity to actually partake in a buying trade. Okay, so you can see how price went up. So look at this. This was the first time price tapped into this zone. When price is returning to this zone, the zone is no longer high probability demand zone. Okay, so that's one of the differences. It could pay. It's possible for the zone to still pay, but it's a low probability zone because it has paid already. So let's see what happened. Look at when price returned. Price disrespected the zone. It went beyond the zone, though there are still some buyers there. That's why you're having this reaction as though you still want to have a buying opportunity. This current price action, as you can see. So I didn't really go too far back to give you the examples. The examples are price action that played out yesterday and I think 2 days ago. So these are recent examples, and you can see there are still some buyers in this region, though liquidity was taken out here before price started giving the buying opportunity. So it's a low probability trade. If you didn't know that this zone has been tapped into before and you want to come and take this, you would definitely place your stop loss not too far from the zone. So you would be the liquidity. They will take your stop loss right there and then price might still move in your direction. So you have to check to see if your zone is actually very fresh. It has to be a fresh zone. Fresh zones are usually respected most times. So if you got any value from this video, please subscribe to the channel and turn on the notification bell. I will see you in the next video. Thanks for watching.